Welcome to the Kofkin Bond & Co October financial update. October has actually been a really good month in the markets globally. In the US, we saw the 30 Dow index actually rise 14% for the month of October, which has actually been the highest rise since 1976. The previous peak in October 1976 was actually 10.95%, so substantially outperformed. This is due to a number of things in regards to the S&P 500 also rose 3.9% and the Nasdaq was up nearly 8%, even though we saw some disappointing results from the likes of Meta, that's Facebook, and Amazon as well. Locally here in Australia, the market also performed really well with a 6% rise for the month of October too. And on the back of, we've had interest rate rise, although the RBA has now reduced those rises to 25 basis points. So we've had two 50 basis point rises, a 25 and a 25, and probably expecting another 25 basis point rise this month as well, as the RBA continually tries to quell inflation. This is obviously having an impact on interest rates rise, and we do see a lot of mortgage pressure out there at the moment, where there seems to be a lot of news articles at the moment of people being forced to sell houses, or the banks now saying you're going to have to make repayments or sell those properties. So with interest rate rises, of course, that puts pressure on household budgets. Putting pressure on household budgets puts pressure on discretionary spending. So we've made sure that our Australian parts of the portfolios are not exposed to areas such as cyclical spending or discretionary spending. As a result, we do see actually a bit of stabilisation coming into the markets next year. There is looking at the US with the Fed having another 75 basis point rise of inflation, where they have stated that they're not going to cool this inflation moving forward, just with interest rate rises. As a result of that, though, the markets pretty much kept it in line and weren't too fussed by that, whereas a lot of pricing seems to be affected into the market. So what can we look forward as we lead into 2023? I would like to suggest that it's going to be better than 2022 as markets do start to rebound and we start to see a bit of normalisation back in and a little bit of the fear coming out, where people start to get used to their new budgets, and we still do see some growth, especially if China, there is talk about China yesterday starting to open up their cities again, and that's going to spur on the economy, which actually also helps Australia as well. So in the Kofkin bond portfolios at the moment, we are in our balance fund. It's been a great month. I think it was around about net of fees, nearly 5% for the month. And as a result of that, outperformed the global index by nearly 50%. So the global index was about 2.25%. Really happy with that performance. And as a result, moving forward, we're still staying out of commercial property, and we are still taking short-term duration bonds on a defensive side of the portfolio and holding a lot of cash at the moment as well. That's the update for October. Look forward to seeing you again for the November update next month.